Good afternoon, folks. Welcome to the Liberty Call for Wednesday, August 24th, 2022. Hope everybody's having a fantastic day out there. My day kind of sucks. I drove an hour into town to find out that my infusion was canceled. They called 2 hours before the appointment when I was in the shower getting ready to head into Denver and let me put this in perspective for you folks out there. It'd be like driving from Clear Lake to Intercontinental only to find out that they canceled your appointment because they've screwed up my prescriptions and the injections for my infusion. So excellent news. I mean, we've only known about this for about 4 weeks, and I called last week to let them know, hey, you told me you were making a change. Do we need to postpone? No, everything's fine. I'll let you know. Well, yeah, I get there, get to the lobby. They're like, oh, we canceled your appointment. I'm like, excuse me? And pull my phone out. Of course, there's a phone call from 2 hours before that I missed because my phone was sitting on the charger. I don't take it in the shower usually. But anyways, my fault. I should have checked before I, drove an hour each direction. But I did get some grocery shopping done. So yay, I don't have to go back out and do that again. So anyway, so that's how my day is gone. Sorry if I've been boring you for the last minute and a half. But anyways, if it's your first time watching the Liberty Call, please give me a thumbs up, subscribe, all that good stuff. I would greatly appreciate it. Smash on that like button. And let's go ahead and jump into the markets. Things, I see a lot of green on the screen right now, which, most people feel that's a pretty much a good thing. So let's see here. The Dow Jones today finished up 0.18% at 32,969. It was up 59 points. The S&P 500 was up 0.29%, closed at 4140. NASDAQ up 0.41%, closed at 12,431. Small caps are almost up 1%. The VIX fell 5.35% today. It's currently at 2282. All right, moving over to Canada, they were up 0.18. Brazil up 0.04, so basically flat. Mexico was down 1.08% today. Jumping across the Atlantic, Germany was up 0.2. UK was down 0.22. France up 0.39. The Euro Stoxx was up 0.41. The Netherlands was up 0.41. Spain down 0.33. Italy up 0.23. Switzerland up 0.73, and Portugal down 0.25%. Moving further east, in Russia, the MOEX was down 0.52, the RTSI down 0.65. Headed over to the Asian markets, Japan was down 0.49, Australia up 0.52, New Zealand up 0.3. Looks like all the Chinese markets were red. The Shanghai was down 1.86. The SESE component down 2.88%. China A50 down 1.25%. DJ Shanghai down 1.95%. And the Hang Seng was down 1.2%, while the Taiwan weighted came in only down 0.18%. So it looks like the Asian markets took it a little, or at least the Chinese markets were in the red by, most of them a percent. Everything else, looks like most of them were, up or down, maybe 0.75% in each direction on most of these major indexes. So, but again, let's bring up the chart and see where things are right now after the last couple of days of pulling back. So this is the Dow Jones. Again, we can see this right here was the beginning of the year, right there where my cursor's at. We can see this steady slide. We did have this nice uptrend. Well, I guess, depending upon your point of view, we had this nice uptrend from about mid-July till where was the peak? Last Tuesday or Wednesday. So about a month, we had a nice uptrend. Again, I know I've shown you these charts a lot going back to other downturns we've had, back in 2008, 2001, and so on. So, this wasn't unexpected to have a bear market rally. But if we zoom in, we can see from the peak, we're down about 3.5%-ish off the top. Something interesting, looking at the S&P 500, you can see that the chart looks a little bit different from the Dow. But you can see this resistance line on the peaks where, and I wasn't even really paying attention to this, but last week bounced right off that resistance. Whereas on the Dow, we actually went through that resistance line. Again, I guess we could probably move this and it would probably line up. It'd probably line up together. Look at that. Look at those peaks. Anyways, all right. Enough nerd chart talk for the day. All right. Well, let's go ahead and jump in and read through today's market recap. S&P 500 turns positive on consumer stocks shine, or as consumer stocks shine. Tech moves off lows. The S&P 500 moved off session lows on Wednesday, led by rising consumer stocks and a move off session lows in tech, though upside momentum was limited as investors await further clues on monetary policy later this week. Cruise stocks rallied to push consumer stocks higher after Jefferies, citing its latest checks on cruise tickets, said cruise ticket prices were showing signs of stabilizing at higher levels. Royal Caribbean, Norwegian, and Carnival were up sharply, with the latter up more than 8%. Other travel-related stocks, including Penn National Gaming, Ulta Beauty, and Ross Stores, also advanced on optimism about the consumer. Retail stocks were under the flat line, weighed down by a fall in Urban Outfitters, Inc. and Nordstrom, falling quarterly results. Nordstrom slumped more than 19% after lowering its full-year outlook as waning foot traffic and bloated inventory levels weighed. The retailer did, however, report quarterly results that beat estimates. Tech was off lows, but struggled to rack up gains as investors appear weary of making bullish bets on the sector, with just days to go until the Federal Reserve officials, including Chairman Jerome Powell, are expected to deliver fresh clues on monetary policy. Boy, they should probably call Blue's Clue. He could probably bring his little magnifying glass and find all the bad things that are happening in the economy. Quote, the expectation is for a hawkish tone from the central bank officials, but the degree of hawkishness will be key, end quote, ANZ Research said in a note. Chip stocks traded roughly unchanged ahead of NVIDIA's quarterly results slated for after the closing bell. The chipmaker issued a profit warning earlier this month, citing a challenging macro environment that has held back growth in its gaming business. Intuit gained more than 4% after the software company hiked its dividend and bolstered its share buyback program following quarterly results that topped Wall Street estimates on both the top and bottom lines. Peloton Interactive surged nearly 20% to cut some of its recent gains as investors cheered news that the exercise equipment maker struck a deal with Amazon to sell its equipment and apparel on the e-commerce giant's platform. Bed Bath & Beyond was among the biggest meme stock winners on the day, surging more than 13% on easing liquidity worries after the housewares retailer said it had secured financing. On the economic front, the data were mixed as durable goods orders slowed by more than expected, while pending home sales fell less than expected in July. As mortgage rates steady, home sales will likely reach, quote, reach a floor before the end of the year, end quote, Pantheon Macroeconomics said. So all in all, not a terrible day. Again, we're still getting bits of unpleasant news about, the economy slowing down. Inflation is still high. Energy prices are still, not low. They're not as bad as they were 2 months ago, but we certainly aren't seeing a lot of the relief that we would have hoped. But anyways, all right. Next up on the agenda, oil ends higher on U.S. response to Iran nuclear deal comments. Oil prices ended Wednesday higher after a volatile trading session on concern that the United States will not consider additional concessions to Iran in its response to a draft agreement that would restore Tehran's nuclear deal and potentially the OPEC members' crude exports. Iran said it had received a response from the United States to the EU's final text for revival of Tehran's 2015 nuclear deal with major powers. Brent crude settled up $1 to 101.22, while U.S. crude settled up $1.15 to 94.89 a barrel. Both benchmarks fell by more than $1 earlier in the session. Oil was also supported after Saudi Arabia suggested this week that the OPEC countries could consider cutting output, though bearish economic signals from central bankers and falling equities weighed. Excuse me. Both crude oil benchmarks contracts touched 3-week highs earlier on Wednesday after Saudi energy minister flagged the possibility of cutting production. OPEC sources later told Reuters that any cuts by the producer group and its allies, known collectively as OPEC Plus, are likely to coincide with a return of Iranian oil to the market should Tehran secure a nuclear deal with world powers. A U.S. official on Monday said that Iran had dropped some of its main demands in negotiations to resurrect a deal to rein in Tehran's nuclear program. OPEC Plus is already producing 2.9 million barrels per day less than its target, sources said, complicating any decision on cuts or how to calculate the baseline for an output reduction. Quote, the oil price and supply outlook suggests that an OPEC Plus cut is not currently warranted, end quote, PVM analyst Stephen Brannick said. Quote, global oil supply could take a hit as peak U.S. hurricane season approaches. Elsewhere, future supply outages in Libya cannot be discounted, while Nigeria's oil fortunes show little sign of improving, end quote. Earlier in the session, oil prices fell after U.S. government data showed lackluster demand for gasoline, which augurs for a notable slowdown in economic activity. Gasoline demand showed a 4-week average of daily gasoline products supplied 7% below the year earlier period. Quote, the plummeting demand for gasoline is dragging the market down, end quote, said Andy Lippo, president of Lippo Oil Associates in Houston, Texas. And like I've said, from the beginning, I don't think we're really going to see a lot of reduction in the inflation across the board until energy gets back to whatever normal is going to be. Whether or not it's, pricing oil between, say, $60 to $70 a barrel, which, based upon the amount of dollar inflation over the last 2 years, would put that price somewhere in that range as a, kind of a baseline based upon the previous prices before all this nonsense got started. But, again, until energy gets back to normal, and, I saw yesterday a chart that I think it was natural gas has spiked quite a bit here in recent days or weeks. So again, we're headed into winter, and, with the embargoes that the European Union is doing with Russia, cutting off their supply, I really just don't see a lot of relief anytime soon. All right. On the scuttlebutt front, and scuttlebutt for you non-sailors out there is gossip. It also means a water fountain too. So I guess people stood around the water fountain back in the old days and, gabbed. So it's kind of like the water cooler, I guess. Twitter whistleblower met U.S. Senate staffers this week. And this comes from Reuters. Twitter Inc.'s former security chief, Peter Mudge-Zatko, has accused the social media company of misleading regulators. That's not good. Met staff in the office of U.S. Senator Richard Blumenthal, he's a turd, this week to discuss his whistleblower complaint. Said two sources familiar with the situation. Zatko, who accused Twitter of falsely claiming it had solid security plan and making misleading statements about its defenses against hackers and spam accounts, discussed his complaint with Blumenthal's staff. Blumenthal, a Democrat on the Senate Commerce Committee with a keen interest in big tech, wrote in a letter to Federal Trade Commission Chair Lena Khan, quote, according to disclosures and evidence provided by Peter Mudge-Zatko, a highly respected cybersecurity expert who served as Twitter's security lead from 2020 to 2022, Twitter executives allegedly failed to address significant security vulnerabilities, neglected the mishandling of personal data, and ignored known privacy risks to users for more than a decade, end quote. Blumenthal called for an FTC investigation in the letter. In an 84-page complaint, Zatko, a famed hacker widely known as Mudge, alleged Twitter prioritized user growth over reducing spam, with executives eligible to win individual bonuses of as much as $10 million tied to increases in daily users and nothing explicitly for cutting spam. According to documents relayed by congressional investigators, Twitter labeled the complaint a false narrative, and that false narrative was in quotes. So I think the bigger issue for Twitter, and a lot of this goes back to the Musk Twitter, who's going to buy it for what price and blah, blah, blah. But I think Twitter's in a bigger problem because this is fraud. And when you are defrauding your shareholders by providing false information, that's a sticky wicket. And, I don't, and I've been saying this for a while, that, Whether or not Elon actually buys the company, I mean, I'm not an Elon fan by any stretch of the imagination. Is he better than a lot of folks? Yes, but he's certainly not perfect by any stretch of the imagination. He's not a libertarian by any which would make him a good person in my book. But anyways, it's when you're lying on corporate or on your financial reports that you're sending out to shareholders, because they're making a decision, is this a good investment or not a good investment? And by, providing false information, that's a bad thing. So anyways, I don't think Twitter's going to, in the end, I think Elon's going to get what he wants. He's either going to destroy the company and get rid of it because it's just a hot mess of lefty weirdos with blue hair who freak out over everything, or he's going to turn it back into what it was intended to be, which is a free speech platform where you can say things. If people don't like it, they can block you. It's that simple. All right. Last article here. You've probably seen some headlines that the Biden administration is going to forgive some student debt. This is a terrible idea. And this is titled "The Millennial Who Paid Off $100,000 in Student Loans Just Months Before Biden Announced Forgiveness Says the President Should Forgive All of It." Isn't that nice? That's nice when, and this person, I think he's a teacher, if I remember correctly. So, he lives off the government. Anyways, let's go ahead and dive into this. There was no confetti, no congratulations or fanfare of any kind. No one cheered for Steve, a 36-year-old, he's a software engineer, a 36-year-old software engineer in Texas when he woke up at 6 a.m. on March 15th, 2022 and made his final student loan payment. He didn't think this moment would be so matter of fact, considering the huge and at times painful impact his loans made on his life. It took Steve nearly 12 years to pay off more than $100,000 in student loan debt. Just 5 months shy of Biden's administration's announcement, it was forgiving $10,000 in loans for borrowers making less than $125,000 a year. Despite the financial, mental, and even physical pain that carrying more than six figures in student loan debt caused Steve, he says he's happy for anyone who receives student loan forgiveness. He just doesn't resent anyone eligible for the government's $10,000 up to $20,000 for Pell Grant holders forgiveness plan. Well, I, as someone who never went into debt for any of this crap, am vehemently opposed to it. Forgive all is my opinion, says Steve. $10,000 is a nice start, but maybe this amount of debt off their backs, people can begin to build their lives, end quote. The Biden-Harris student debt relief plan is expected to wash out roughly $300 billion worth of debt, according to Penn Wharton budget model. There are approximately 1/3 of federal student loan borrowers, me included, who will have their debt completely wiped out, with benefits going disproportionately to working and middle income households. Since 1980, the cost of public and private colleges has nearly tripled. Federal support, however, has not kept up, which means more people have to borrow money in order to get degrees. Recent data totals student loan debt in the U.S. at $1.75 trillion, with the average college graduate carrying as much as $40,000 in debt. The average graduate student owes up to $189,000 in federal student loan debt. Well, maybe don't go to graduate school, or choose a profession where you don't have to go $100,000 in debt. There's plenty of welders and all sorts of jobs out there that don't need any formal education. Trade school. Or join the military. You learn a lot there. Not that, working for the government's really a great idea right now. Diving back in, Steve graduated undergrad in 2008 with a degree in English that he says was virtually free because of an in-state scholarship program. But after struggling to find a decent job, that's where I saw he was a teacher. But after struggling to find a decent job, he went back to school to get a master's in teaching. It was a mistake, he says. He borrowed roughly $70,000, but interest ballooned the total to $118,000. Well, again, you made a bad financial decision. You should have to live with it. He could not pay off his loans on his teaching salary, and by the time he turned 30, he was questioning what he was doing with his life. He had no savings, worrying about debt impacting his physical and mental health. Quote, "If I had a medical emergency, I would be in ruin," he says. Desperate to make a change and dig himself out from under debt that was keeping him up at night, Steve taught himself how to code. See, this right here, this is a perfect lesson. He took and found a way to get himself a good income. Self-taught. Steve taught himself how to code. There was no chance he was going back to school and change careers. He refinanced his loans for a lower rate, and with his higher salary, began making extra payments. I knew I was getting into somewhat. Let me start over. I knew I was getting into somewhat when I got the loans. Steve says, I knew teaching wasn't a lucrative career, but I thought I could stay afloat. I definitely miscalculated. He said he left his heart in the classroom. Aw, those poor kids. It was so easy, though, to get a loan at 22, he says. Quote, I had no employment history, no income. Universities know that, and they just jack up the prices, Steve said. Quote, I want to live in an educated society, but you shouldn't have to ruin yourself to get an education. The fact that you can't even declare bankruptcy, the only way to relieve the debt is to die. That's just really messed up, end quote. Submitting its final payment, paying off 6 months worth of debt in one foul swoop was rather anticlimactic, Steve says. It took a while to sink in, but once it did, he says he began to feel like anything was possible. With the additional income, he began to think he could get his finances back on track so he could decide to meet with a financial planner. Just maybe I'll be able to retire someday. His friends ask him often, he says, whether he's upset at the loan forgiveness program, having just paid off so much in student loans. He's actually quite excited, he says, though it would be nice if it would, quote, be nice if I could retroactively benefit, but I'm not mad I missed out by a few months, end quote. See, he got himself into a financial predicament by borrowing too much money for an education that would not provide him the income that would actually allow him to pay that debt off. So what did he do? He self-educated himself, learned to code, got a job that he's now able to pay this off in rather short order. So amazing. See, what I would actually recommend doing, and let me bring up, I looked this up last year. Let me make this bigger so you can see it. This is the top 30 universities' endowments, and they total $290 billion. Let me flip back over to where I was at. And this comes from this article from Newsweek. It's actually a year old, but I imagine the data is still fairly accurate. So I went through and totaled all these up. And like I said, almost $300 billion. So I'm sorry, unless the U.S. government is going to seize Harvard, Yale, Stanford, Princeton, MIT, and the like. I mean, Harvard has an endowment of $41 billion. I'm sorry. If you're robbing me to pay off these loans, you should go in and rob these people too. It's only fair. All right. Well, that's everything I had for today. That was my soapbox segment for the week. So anyways, all right. I hope everyone has a fantastic night. If you need anything from me, please go to dsafinancialgroup.com. All my contact information's there. And I'll be back tomorrow. Y'all have a good evening. Bye-bye.